year Russia invaded Ukraine and shook the world. The year markets saw a tumultuous spell, and also the year India saw the great electric vehicle boom. As 2022 winds down, let's bring you the most seminal moments that shaped the year gone by, starting with Indian equities. The year of the Lal Street outperformance, the year where Omicron, Russia-Ukraine war, global inflation and subsequent Fed rate hikes along with massive FI selling did not dent sentiment on the street. Mangalam Malu rounds up the year that was on the Lal Street.
Let's rewind 2022 as we look forward to 2023 and look at what an eventful year it was for the markets. It's easy for us to forget the amount of events that we actually had to overcome during the last year. They say bull markets actually climbed walls of worry. For us, it was fortresses of worry in this year itself. Remember, at the start of this year itself, there was this big Omicron wave of COVID that plagued the nation. And just as we were recovering from that, the Russia-Ukraine war dawned upon the world, as a result of which there was a lot of uncertainty and massive global inflation. Guess what the global inflation and the COVID-led printing money led to the central bankers in the world do? They printed a lot of money, so they had to unwind all of that, and that led to a lot of rate hikes by the Fed, the highest in the history in 1 year. And then we had the European energy crisis plague somewhere around the onset of the winter, and all of this was plagued by massive FII selling, the highest that we've seen in the calendar year for our markets itself. Amidst all of this, our markets stood tall and stood resilient because of strong domestic demand, PLI schemes and China plus one factor playing for all the corporates in India, and resilient domestic flows matching FII selling to the dollar. So in light of that, we continued our streak of gains. In fact, a 7-year gaining streak. That's the highest that we've seen in the history of our Nifty trading. 5% gains for both the Nifty as well as the Sensex. The last 7 years, we've compounded at over 12%. How did we fare against the world? We were standing tall out there as well. The Indian markets did a 5% gain as against the Brazilian markets just under 5%. And we far outperformed developed markets, the likes of Dow Jones, Hang Seng as well as NASDAQ, all of them. NASDAQ was down 33% in 2022. But we also saw weakening in the currency because of the Fed rate hikes, etc. The USD versus INR pair, the rupee depreciated by about 11%. So compare it in dollar terms, we actually had a negative return of 5.5%. There was massive FII selling, right? 2.75 lakh crores. That's the amount that FII sold in 2022 in our cash markets. The domestic institutional investors, the resilient ones, bought 2.73 lakh crores. If you just take a look at the way the FII sold, this is the highest that we've seen in a calendar year in the history of our markets. So in light of that, how did the other indices fare? The Nifty Bank was a strong outperformer, 21.5% higher. It was a weak year for the broader market, so the mid-cap index just managed to close in the green, but the Nifty small cap was down by 14%. Let's drill it down to individual sectors. It was the year of PSU banks, 70% higher on that index. The metals grew about 22% at an index level, but it was a fair amount of weakness for the pharmaceutical pack and the IT pack, one of the weakest years that we've seen for the IT pack in the last many. Individual stocks, the latest entrant onto the Nifty was its top performer as well. Adani Ent did 125% in terms of gains. ITC got the top honors board as well. A lot of jokes notwithstanding, this year was the year of ITC with a 54% gain out there. Coal India up around 52% as well. A lot of the old power companies came back. NTPC up 34%. In terms of other underperformers this year, however, the IT pack, like I said, stood out. Wipro leading the way down. 45% cuts out there. Tech Mahindra down 43% as well. Divi's Labs did not do too well either. And HCL Tech Infosys down 19 to 21 odd percent. This year was the year of PSU banks, like I said. 144% gain for UCO Bank. Canara Bank was up around 60 odd percent as well. SBI 33%. In terms of other sectors that did well, it was the defense stocks. Mazagon Dock almost 200% higher on that one. If you invested your money at the start of the year in Garden Reach, you would have doubled it. BEL itself would have given you around 43% in terms of returns. But that's not all. We had some other mid-cap gainers as well. Indian Hotels 75% higher. TVS Motors zoomed ahead 73%. Cummins and Federal Bank up anywhere between 40 to 66% too. In terms of losers though, we had the mid-cap IT names, Mphasis, FirstSource, BirlaSoft, all of them would have halved your money. So would IEX, in fact, from the start of this year. down 44%. We were coming off a COVID year, so we saw some declines in all these diagnostic companies as well. Metropolis, Dr. Lal, falling anywhere between 40 to 60 odd percent. And this was also the year where we saw all the new age businesses decline, and how? A big cut, anywhere between 50 to 60% on Paytm, Zomato, Nykaa, PB Fintech, Delivery, even car trade was down 45%. But let's end on a positive note. There were a lot of gainers from the broader markets. Adani Power up almost 203%, NDTV 210%. It was the year where sugar did well as well, 240% for Ugar Sugar, and FACT was up 180%. So that's the year that was 2022, an eventful one for the markets.
Inflation was one factor that most countries had to deal with in 2022. Lata Venkatesh joins in with a quick wrap of the global economy and how it dealt with inflation.
The year 2022 has entered the record books for the two I's, interest rates and inflation. The United States saw the highest inflation in 40 years in 2022, while the Eurozone is seeing the highest inflation since the EU and the Euro were created. Both regions saw several months of near or over 10% inflation in 2022. Looking back, it's surprising why advanced economy central banks missed the price surge. Since March 2020, the US Fed had expanded its balance sheet from $4 trillion to $8.97 trillion at its peak in March 2022. Likewise, the European Central Bank expanded its money supply from $5 trillion to $10 trillion over the same period. This hugely excessive money supply was chasing fewer goods thanks to COVID dislocations and finally the Russia-Ukraine war, which led to a drastic fall in the supply, especially of wheat and gas, for a while. The Fed was the first to pivot. On November 29, 2021, Jerome Powell, for the first time, dropped the word transitory in his description of inflation. What followed was the fastest ever rate hikes in the history of the United States, Europe, and indeed most countries. The US Fed, starting in March, has raised rates by a cumulative 425 basis points this year to 4.25 to 4.5% by December. The ECB, European Central Bank, wasn't far behind in raising rates. It has raised rates 4 times by a cumulative 250 basis points. The Bank of England raised rates by 325 basis points, divided over 8 hikes, although it began hiking in 2021 itself. 2022's legacy to economic literature was the word pivot. Almost every central bank was caught napping on inflation and had to take a 180-degree change or a pivot from their dovish stance. The US Fed pivoted in November 2021, like I told you. The latest to pivot is probably the Bank of Japan, which raised its cap on the 10-year yields from 0.25% to 0.5%. Back home too, inflation was a headache, but not quite as ugly as it was in the developed Western economies. It stayed outside or above the mandated 2 to 6% zone in which CPI has to stay. So this forced the RBI to write to the government explaining why the mandate wasn't met. The letter, unfortunately, wasn't made public. Inflation apart, the Indian economy had a good 2022. At likely 6.9% growth rate for 2022, India was one of the fastest growing large economies. Growth was reflected in the robust demand for credit growth, as you can see, 7.5 to 17.5% over the year. The steady rise in GST collections and direct tax collections is another proof. And now these taxes look set to surpass budget targets by a good measure. The worries were the twin deficits. While fiscal deficit at 6.4% for the central government and 2.6% for the states is the known devil, the one that sneaked up was the rise in current account deficit, triggered by a fall in exports, thanks to the global slowdown. Of course, crude prices was another reason. The rupee therefore fell around 10% in 2022. Now, if the I words, inflation and interest rates, dominated mindspace in 2022, the R word may dominate 2023. Recession, shallow or deep, is expected to hit the United States and Europe. The IMF forecasts global growth to slow from 6% in 2021 to 3.2% in 2022 and to 2.7% in 2023. At 2.7, it would be the weakest since 2001, except for the global financial crisis and the COVID-19 pandemic years. As a result, India's growth is also seen slipping to around 6% in 2023, but it may still be one of the fastest growing large economies. Now, that's the bright side. The dark side could be continued weakness in rural demand, lethargic private sector capex, and continued high fiscal deficit. Well, I began by saying 2022 is the year of the two I's, inflation and interest rates. 2023 may be the year of R, or recession, harsh or mild, but ultimately everything depends on the three C's: crude, COVID, and climate.
The Indian economy saw multiple challenges in 2022, ranging from a spike in energy prices from the Russia-Ukraine war to dealing with the fallout of the Fed's rate hike trajectory. Sapna Das is here to take us through the decisions taken by the governments to deal with these challenges and also tells us what lies ahead in 2023.
The initial impact from Russia's invasion of Ukraine saw Brent crude prices shooting to $130 per barrel, global food supply being disrupted, and inflation soaring. This posed multi-pronged challenges to the Indian economy. With April inflation shocking at 7.79%, the government swung into action. Adding to the freeze on pass-through of crude oil prices to petrol diesel, it restricted wheat exports in May and followed it up with a slew of other measures, including slashing excise on petrol and diesel and doubling the fertilizer subsidy. But as crude prices continued to rise, more was needed. India shrugged off intense global pressure and leaned heavily towards Russia for cheaper crude. So much so that Russia is now the top supplier of crude oil to India, upstaging traditional suppliers like Iraq and Saudi. But the government also cashed in on an opportunity these surging prices threw up. It introduced a windfall tax on oil cores and mandated them to ensure that domestic sales of petrol, diesel and ATF were at least 50% of their exports. Multiple reviews later, the tax remains, even though Indian basket of crude oil has slipped to below $78 per barrel. This is very close to the two-week average of $75 per barrel, below which threshold the windfall tax should become nil. Indications are the government hopes to garner close to 40,000 crores from this windfall tax by March end. But if the drop in crude oil prices sustain, that number may not hold. In the meanwhile, spike in global inflation prompted the American Central Bank to hike rates aggressively. And this pushed the rupee to record weak levels, from breaching 79 to a dollar on the 5th of July to 83.20 to a dollar on 20th October. RBI's measures to shore up the currency, which included more diversified sources of forex funding and internationalization of the rupee, have had a limited impact so far. The trade deficit continues to widen, crossing $198 billion in the April to November period. Meanwhile, between April and September, India's forex reserves dropped by $75 billion to $432 billion. Since then, RBI has managed to claw back reserves to around $564 billion, providing 9 months of import cover. It was also managed to make some headway on inflation. November CPI has fallen to 5.8%, which is within RBI's tolerance band. However, the rate hikes are taking a toll on the GDP. RBI has now revised the FY23 GDP forecast down from the 8 to 8.5% in the economic survey to 6.8% currently. That notwithstanding, India's economy expanded by 9.7% in the first half, thus continuing to be among the fastest growing in the world. The government has also stuck to fiscal consolidation and not resorted to additional market borrowings, which is a big plus. So, as we move into 2023, the challenges are plain. There's uncertainty over COVID infections, given what's happening in China and elsewhere. There's pressure to maintain growth with fiscal consolidation, even as large parts of the world stare at an impending recession, and of course, keeping inflation within comfort levels while revisiting fuel prices and maintaining a stable currency.
And as we draw to a close in 2022, Pavitra looks at the 3 categories of funds that manage the most money. How have actively managed funds fared this year? How does the performance look if we expand the time frame? Pavitra is standing by with the data.
As we wind down in this year, we thought it would be really interesting to look at how mutual funds have performed versus the benchmark. So let's now talk about the performance of large, mid and flexi cap funds today. This is all data from Morningstar, and I'm going to start with the large cap category. On your screen now is the one-year performance of the top 10 largest large cap funds. The benchmark return for this period is around 11%. And now let's compare how all of these funds have fared versus the benchmark. The best, like you can see on your screen, is the Nippon fund. It has a return of nearly 17%. HDFC is a close second. And then you have the ICICI Pru fund, which has clocked in a return of around 12.5%. Apart from these, none of them have managed to beat the index. So let's not stop at just a one-year return. Let's actually zoom out and take a look at 3-year and 5-year returns as well. And unfortunately, things don't look much better when you do that. A scorecard for the large cap funds will show you that for a one-year period, only 4 of the 28 managed to beat the index. Remember, 3 of these are already the funds that we spoke about from the top 10 largest fund list. This is what I showed you in the previous slide. In terms of 3-year returns, only 2 of the top 10 and 4 of the total 26 managed to beat the benchmark. And then if you want to move out even further, you will see that he had only 1 of the top 10 and also 1 of all 25 that could beat the benchmark over a 5-year period. So this is a complete recap on how the large cap funds did. But let's now move on and talk about the mid cap funds as well. This is the top 10 largest mid cap funds and the 1-year return. The benchmark for this period came in at 8.74%, and only 4 of the top 10 funds by size managed to beat that. HDFC did the best, like you can see. It clocked in a return of 16%. This was followed by Nippon at 11%. And then you had Sundaram with a little over 9%. Let's also bring the scorecard up for you. And there you'll see that 4 of the top 10 and 8 of the total 25 could beat the benchmark. This is for a 1-year period. If I look at the 3-year annualized returns, you'll see 3 of the top 10 and 5 of all 23 which could come in above the benchmark return rate. And for a 5-year time frame, we saw 4 of the top 10 and 8 of the total 21 managing to beat that benchmark figure. Lastly, we have the flexi cap category, and all of those funds will be on your screen as well. The top 10 largest are once again on your screen. The benchmark return is 10.2%. So let's see how it stacks up. The best performing fund in this category has been the HDFC Flexi Cap Fund. This one actually saw a really solid return, 24% for 1 year. But you know, this is quite an outlier, because if you take a look at all of the rest after that, they don't look nearly as good, right? So the scorecard will show you that things aren't much better even when you expand the time frame and take a look at that. So for a 1-year period, only 3 could beat it from the top 10 list, and from the total 28, only 5 managed to return, which was higher than the benchmark. Looking at the 3-year annualized returns, 3 of the top 10 and 6 of all 24 managed to beat the benchmark. And lastly, for a 5-year period, we had 4 of the top 10 and 7 of the total 21 which clocked in a return which was higher than the benchmark. So that is a recap of how large cap, mid cap as well as flexi cap funds have done. And while we have been talking about, equity flows being good, SIPs picking up month after month, it is important to highlight that fund managers have found it quite hard to beat the benchmark, at least in these 3 largest categories that I highlighted.
Welcome back to Rewind 2022. Now, this year was truly an electric year for the auto industry. From hatchbacks to SUVs to bikes, there was no stopping the EV boom as Indian roads witnessed a near 3-fold rise in this fast-growing segment. Parikshit Luthra recaps the big launches and landmarks for the India's EV industry in the year gone by and tells us what's in store for 2023.
From 3.2 lakh EVs in 2021 to around 10 lakh electric vehicles in 2022, India's EV sector has grown over 200% this year. From 0.7% adoption in 2019 and 2020 to 1.7% in 2021. 4.7% of all vehicles sold in 2022 were electric. While the overall percentage may seem low, the numbers are clearly showing strong growth. If monthly sales were around 13,000 in 2020, that number increased to 43,000 in 21 and 1.2 lakh in 2022. Among states, Delhi is leading the way with 10% of all vehicle registrations for EVs. When it comes to EV adoption, Karnataka is at 6.1%, Maharashtra at 5.6% and Tamil Nadu at 3.8%. 2023 is set to be packed with new electric vehicle launches. For the first time, at least 30 pure EV companies will showcase their products at the Auto Expo in January, along with electric vehicles from established OEMs. So here are some cars and two-wheelers that will definitely hit the roads next year. Tata Motors, which has launched the 10 lakh Tigor EV, will begin sales in January. According to reports, you could see the Altroz and the Punch in electric avatars as well. Hyundai will be launching the premium electric car, the Ioniq 5, which is the same platform as the Kia EV6. This will give you a range of 631 kilometers and could be priced around 50 lakhs. MG Water wants a chunk of the mass market EV segment. They will be launching the Air EV, which is most suitable for intra-city travel, will give you a range of 200 to 300 kilometers, will be the smallest electric car in India and will be priced around 10 to 15 lakhs. Mahindra & Mahindra's XUV 400 EV will be commercially launched in January. Promises a range of more than 450 kilometers and is likely to be priced around 15 to 20 lakhs. Expect a strong offering from French car maker Citroën. They will be launching the EC3 electric hatch to compete aggressively with Tigor and Tiago EVs. This will offer a range of at least 300 kilometers and could be priced between 10 to 12 lakhs. In the two-wheeler space, you can expect Bajaj Auto to launch multiple products. 2 EVs, one for micro-mobility and one for the B2B segment for Bajaj-backed Yulu, and more than one new scooter under the Chetak brand. Ather 450X Upgrade will be launched in January, and an all-new electric scooter from Ather can be expected in August-September next year. Bharat Forge-backed Torque Motors will be launching a facelift of the Kratos in January, followed by one new electric motorcycle platform in 2023. The world's largest two-wheeler manufacturer, Hero MotoCorp, will focus on expanding sales of the Vida V1 Pro and the Vida V1 Plus from 3 to more cities. But we do hear the company will launch at least one new electric scooter under the Vida brand in 2023. All in all, 2023, EV makers will be increasing volumes and launching new products. According to industry estimates, market share of electric two-wheelers could go up from 15% to 25% next year. Market share of electric cars could go up from 1.4 to 3%. That is from 50,000 electric cars in annual volumes this year to 1.2 lakh cars. Pricing pressures could impact the growth of the sector. Battery costs have been going up by 7 to 8% and are currently around $160 per kilowatt hour. This could impact sales. Any COVID disruptions in China may also impact production and prices.
Well, 2022 was a year of reckoning for the box office. Bollywood faced one surprise after another as films with a pan-India appeal smashed box office records and big-ticket mainstream Hindi films failed to rake in collections. Truly the year the box office came of age. Vahishta rounds up all the hits and misses of the year that was.
After 2 consecutive years of clouded growth, 2022 finally brought some sunshine to the cinemas. The start of this year suffered the lack of quality content, leading to low footfalls at the theatres. These led to a dent in box office collections, supported by Indians shifting preference towards consuming content on OTT apps. Even as Indian moviegoers hit the theatres, footfalls at leading multiplexes remained below pre-pandemic levels. But Hindi films like Gangubai Kathiawadi and Alia Bhatt Starer started pulling the crowd back into the theatres, clearly spelling out that quality content is supreme. This movie made solid collections of 129 crores. Other blockbusters like Kashmir Files, RRR, KGF Chapter 2 had longer run times at the theatres. While movies like Bhool Bhulaiya 2, Thor, Brahmastra, Drishyam 2 and Avatar were the big crowd pullers. Although the number of Hindi films crossing 100 crores at the box office this year was less than that of 2019, the pre-COVID year, also because quite a few released on the OTT platforms. But not everything was shining bright in 2022. We also saw some major disappointments from films with high expectations like Aamir Khan starrer Lal Singh Chadda, Vijay Deverakonda's Liger, and the Akshay Kumar starrer Raksha Bandhan. Each of these movies managed to clock about 20 to 60 crores as their lifetime collections. But as we end this year, Avatar: The Way of Water was the much-awaited movie and performed just as expected. Opening day collections at 41 crores were the second highest this year, only after KGF Chapter 2. Elara Capital expects the movie to clock 500 to 600 crores. Hindi and films which are dubbed into Hindi saw a total box office collections of 3,660 crores until the 22nd of December this year. That is thrice the previous year's number, but at 65% of the pre-COVID year 2019. A revival in footfalls in December has definitely boosted this number in 2022. This year, multiplex stocks have also seen some good momentum when compared with the broader markets. In fact, PVR and Inox have trained their focus on opening new screens and offering unparalleled movie-watching experiences. So as the curtain comes down on this year, are you heading to the theatres this weekend?
Well, that was a snapshot of the year 2022. Happy New Year to all our viewers and keep watching CNBC